In our NetPicks QuantiTrader service, where we provide a fully developed, simple-to-follow stock trading system, we frequently discuss the importance of understanding drawdowns. Now, we all know it's very important to develop a mindset that's conducive to trading. One of the most important parts of that mindset is how to handle drawdowns, how to live through the daily, weekly, or monthly drawdowns that all traders are going to have to live through. So what's a drawdown? A drawdown is simply the valley between new equity highs on your equity curve. So by definition, you can see that a trader will spend most of their trading career in a drawdown. Now, some traders think drawdowns are an extremely rare event, or at most, once a year or quarter event. But the fact of the matter is that traders will spend more than 75% of their time in a drawdown. Take a look at this equity curve of one of NetPicks QuantiTrader systems. It has a compounded annual return of 56%, but a maximum drawdown of 21. Now, many will look at that 56 and think, wow, but not understand the reality of what it takes to get to that 56%. On this graph, the green boxes are new equity highs. This is when your account is making more than it's ever made trading this system. These are your feel-good times. Now, look at the red line when it's not in one of the green boxes, because this is the rest of the story. That red line is you living in a drawdown. I'm thinking that 75% of your time in a drawdown may be a little too conservative, and it could be even more. So if you're going to spend more than 3/4 of your time in a drawdown, you need to learn how to live through them. So here's a list of 5 things that I think you should do to help you live through these drawdowns. Know the drawdown numbers of every system that you trade. Your ability to handle drawdowns, hands down, will depend completely, 100% on how mentally prepared you are for them. If you're trading, and consider yourself a trader, you need to be very aware of what will happen to your account during that drawdown. If you do, you'll be mentally prepared and have the intestinal fortitude to stick with the program through these tough times. One of the main benefits of trading with an algorithm like we use at NetPicks QuantiTrader is to eliminate those counterproductive emotional decisions. Don't offset that advantage by acting emotionally when you're in drawdown. Measure your drawdown. It's completely unreasonable to expect a trading system to make money each and every day of each and every month. Things simply don't go up nor down forever. They peak and valley, go through up cycles and down cycles. The maximum drawdown for this system is 21%, and the drawdowns experienced so far have been 10% and 9.7%, both completely in the realm of possibility. I believe this simple exercise will get you used to what a drawdown is and will help you to live through them, since most of your time will be spent in them. Just like death and taxes, you can't escape drawdowns. The only way you can avoid death is not being born. The only way you can avoid taxes is never making or spending any money. That's silly, but it's all true. The only way you'll never encounter a drawdown is by never trading. That seems silly as well, but it's true, isn't it? So if you want to trade, you need to accept drawdowns. But more than that, you also need to expect a new maximum drawdown will probably take place in the future, after you've invested, of course. If you approach your trading accepting drawdown and have the expectation of a new maximum drawdown somewhere in the future, you'll never be a nervous wreck who can't think straight when it happens. You'll take it in stride, step back, and assess the system rationally. Accept the fact that there's no such thing as risk-free returns. You can easily get no risk by investing in U.S. savings bonds, but will you be happy with gains of just 2% per year? Probably not, and for that reason, traders are on the lookout for larger returns. But how many are prepared for the higher risk and volatility that accompanies that higher return? Our natural tendency is to stop that which is causing us pain, which is our losses. And so by a human's natural inclination to quit a system when it's in a drawdown because it just doesn't feel right, you have to overcome this very basic human instinct by making it all about the statistics and being prepared. It's important to note that things just don't go down forever either. Trading systems are very cyclical. They make money, they lose money, they make money. It pays to stick with a system in its downturn because their cyclical nature means they will come out of it. Quit once the system has fallen below your predetermined get out. You know your drawdown numbers. You measure your drawdowns. You've accepted drawdowns. And you expect to have another large drawdown somewhere in the future. But there's one more very important question to answer. What if the drawdown I'm in is more than a drawdown and the system is just broken? You need to have a mechanism to help you answer this question. You need to have a mechanism to know when to move to cash. You gotta have a line in the sand. Fortunately, QIT's line is the circuit breaker, a moving average on the equity curve that we use to move to cash once it's violated. Without this line, you could go crazy wondering whether the current drawdown equates to a broken system. Drawdowns are unavoidable, just like taxes and death are unavoidable. Learn to accept the fact that drawdowns will occur as long as you trade. They are that terrible feeling in the pit of your stomach. Drawdowns happen. Drawdowns will happen again and again and again. That's the fact. Successful traders know this, so they prepare for it.